As a chef, I know flavor doesn't begin in the kitchen. It begins on the land. And Westhome's nature-led Australian Wagyu is a story written in the landscape of Northern Australia. Cooking is storytelling, and Westhome Wagyu carries a story of Northern Australia itself, raw, powerful, and deeply authentic. It's a testament to the passion and care raised in the rhythm of Northern Australia. I'm Chef Maylin from 88 Club in Los Angeles, and I invite you to visit westhome.com/Maylin to learn more and taste a story only Westhome nature-led Australian Wagyu can tell. That's westhome.com/MEILIN.
Hello and welcome to FinTech Insider Insights. I'm Ross Gallagher, Head of Consulting here at 11FS. Now, since I've been at 11FS, we've always talked about banking as a battlefield. Incumbents under siege, challenges attacking from all sides, and endless transformation programs trying to drag organizations across the page. The framework helped explain why so much money was being spent, and frankly, so little was really changing. The assumption was always that no one had truly made it to the other side at scale. The challenges had the tech, the incumbents had the customers, and big tech loomed in the background. But in 2026, the more interesting question might not be whether someone had crossed the battlefield, but it might be whether the battlefield itself has changed. To help us unpack this, I have a quite excellent panel of guests with me. First up, from our very own 11FS, David M, Brear, our Group CEO. David, great to be back together on the podcast. How are things going?
Super good. Very tiring week, I'll be honest with you. I've started to realize I'm too old to travel around as much as I used to, and just like my own bed. These days. It's kind of weird, but no, really good. Trip out to Monaco this week to basically feel bad about how inexpensive my watch is. But other than that, it's been really good.
Love that. All right, great. Also joining us today, Richard Davies, CEO of Allica Bank. Richard, welcome back to the show. Seems like an obvious question. It's been a good week for you guys, but how are things going at Allica?
Yeah, no, it's been a great week. So we announced our Series D raise of $155 million at a just under $1.2 billion valuation. So that's pretty cool sort of milestone for us. Though, yeah, we're always very much execution is king. So back to the grindstone and onwards.
Yeah, hardly took a breath to celebrate by the sounds of things. But no, big congrats. Obviously, we were really excited to see you hit what is a really big milestone. But yeah, great to have you on, and thanks for coming on to share your insights. And last but not least, we have Sophie Guibaud, strategic sparring partner at Building Alpha. Sophie, first of all, I always love saying that title. It's excellent. Great to have you back. How are things?
I'm very good, very happy to be here. Lots going on at the moment, supporting the growth of the challenger bank in Uzbekistan, whose name is TBC, and also doing quite a few advisory on banking as service for banks in the Middle East. So super happy to join this discussion today.
Wow, awesome. Love that. All right, look, that's our panel. So let's jump in. So in the first half of the show, we're going to redraw the battlefield for 2026 and ask who actually has leverage today. David, I think this is really your concept. So I think it feels natural to sort of start with you. Maybe you can take us back and sort of describe the banking battlefield, where it came from, and maybe why it resonated.
Yeah, I mean, look, I'd love to claim it, but I think it was something. I really remember me and Jason on a plane back from a workshop somewhere, and we were struggling to get a way of describing this transformation to people, because very much it was how can we take the advantages of fintechs being a big organization, and what does that really mean? So I'd love to claim all of the thinking was ours, but there was this guy called Clayton Christensen, quite a smart fella, who had this great book called The Innovator's Dilemma. And really the mapping that he had was, would the incumbents of any industry, not just financial services, but there is always this disruption of new challenges to the market and the incumbents. And often the balance and that every industry finds itself in is, will the incumbents fundamentally understand how innovation works. And I don't mean the hands wavy, let's all get a lab type innovation, but how do you fundamentally make change happen quicker and put things in the hands of customers before disruptors who enter into that market reach scale? And that's really what we were trying to show people, because, on one hand, you've got gigantic players in financial services with, every reason to win. But actually the change of dynamic to that is the rules of engagement shifted. Doing digital in its broadest sense, building digital capability is not just a rethink of how you've done things before, but fundamentally it's Richard hit the nail on the head there. It's like, get back to delivery. Like, actually, how do you execute? How do you make these things happen? And so the challenge isn't just, look, who's got the most amount of customers, and, it's kind of a dick measuring competition of who's got the most. Those things are important, don't get me wrong, but it becomes a capabilities conversation. And that's where, you really start to see different things. And to be honest with you, it's one of those ones where, me and Jason have often joked, we feel like a comedian that just keeps getting asked to do that one joke again. Do you know what I mean? It's like 3 weeks ago, I went to a bank board and had this exact same conversation, because it's just a nice way for people to feel that they understand the grasp of something that actually is inherently incredibly complex.
And sticking with you, David, it feels like what you mentioned around the fundamentals of that dynamic sort of shifting, I suppose, was the difficult thing to sort of get across with the right level of urgency. I think, it almost felt like there was sort of two camps at that point. It was like a mindset of everything just is sort of where it needs to be now from a capabilities, a technology perspective. We just need to sort of polish it, maintain it, and we'll be good. And then the sort of the disruption that was all right at that point at an early stage, but you could start to see the threat, right?
Yeah, I think that's evidenced in the axis as well. So actually, one of them being scale of customer base. That's really how people have been describing success, to date. But actually, that can be eroded by the other axis of the sophistication of your digital services. And actually, if you can acquire customers, 100 times quicker than somebody else, then actually the things that you think are strategic advantages can be eroded really quickly. Some of them take a lot longer. If you've been a bank for 300 years and you've got an amazing balance sheet that has been built over that period of time, it's going to take a real long amount of time for those things to change. But there's sort of shifting sands in that. You roll back to 2016, and this was a conversation around, these emerging things coming off the bottom of that axis with no customers. And that's why actually, as you see that change, like I say, this diagram makes me feel slightly like a weatherman, because we're sort of talking about the fronts coming up from all of these different regions. But, we're seeing customers being acquired at a rate like never before. And, that's down to what people are doing and how they're doing it, as much as just the fact that they are.
Richard, I guess, over the last sort of 15 plus years, when, we have seen this wave of disruption that has definitely reshaped the sort of banking landscape. And I know you've sort of experienced it from the sort of bank side and then also the challenger side. So I'm really interested in your perspectives, and I suppose maybe the narratives and some of the differences between the two over that period.
Yeah, so it probably really got started properly around 10 years ago, didn't it, really, with the sort of origins of the Revolut, the Monzo, the Starling, I guess Oak North, sort of, etc. I guess it goes through phases, doesn't it? There was sort of a phase of, can these things become profitable, or are they just sort of burning growth VC money? Like, to what degree can they really actually therefore take share from the incumbents? And I guess it feels like that's gone sort of through a cycle now, where you definitely have some scale players in different areas. So I guess now in the sort of established SME category, we do kind of becoming quite scale. We're about 6% share of that, should be 10% in the next 2 years. And yeah, profitable, right? We're profitable. Revolut's clearly very profitable, etc. So I think those sort of doubts have sort of broadly been put to bed on some players, right? Clearly some have failed along the way, but that's kind of classic disruption, right? Some scale, some fail. I think there is kind of probably an interesting question to what David mentioned, that sort of certainly your classic bank sort of equity analyst might raise, is that sure, you've got customers, you haven't got balance sheets. And it's probably fair to say that most players have failed in lending. So you kind of look collectively at the sort of Monzo, Revolut, Starling, the amount they've actually lent is very, very low against the customer base. But then equally, you can view that as upside, right? I mean, different perhaps with ourselves, with Oak North, because we started with lending and then added the sort of payments products. But yeah, I guess that's maybe where some of the critique comes, that sure, you've got customers, you've got good digital experience, you've got good payment accounts, but you haven't actually lent. And I think some of the different players might have different views, right, as to whether that's actually a core part of their business model or not, right? I mean, someone like Revolut's clearly gone very broad into all sorts of surrounding services that banks didn't traditionally provide. So I think the degree to which is that question accurate, and I think it's quite an interesting one right now. And then the other interesting question, right, is what does AI do to all this mix? Clearly, AI is sort of sending waves of fright through kind of different sectors, investors on a kind of daily basis, right? The kind of SaaS-mageddon, SaaS-apocalypse type stuff. And what does that mean for this sector, right? Is I guess people are generally saying that now being asset light is a bad thing because it means you can be copied very easily by AI. Asset heavy is good. I guess people would say the balance sheet is asset heavy. Is that therefore a good thing or not? Or I mean, you see wealth management, right, being right in the forefront of that kind of fear of AI. So I think some very, very big questions there around what does AI do for this sector as we go forwards.
Yeah, completely agree. I think another thing that I want to pick up on, I guess, Richard, is what you said about that sort of, I suppose, the early days, certainly up until sort of 21, 22, that kind of growth at all costs, sort of that ready access to VC funding and sort of prioritizing scale over profitability. I suppose post 2022, as the sort of market dynamic shifted quite a bit, and we saw all of the consolidation and some of those very successful businesses scale, as you mentioned. But I suppose it was an important inflection point. It's an interesting time, I think, in terms of where we are now. You've got some of those businesses that really have scaled and are really doing quite well. But I think there's to your point, when you look at where sort of investment is going in the market now, very much concentrated on sort of AI digital assets businesses. Sophie, what do you think if we sort of accelerate forward a little bit to the now versus sort of 10 years ago, what do you think the landscape starts to look like today? What are some of those bigger bets that people are getting excited about?
Yeah. So I think what we have seen, or what we are seeing in 2026, is that on the incumbent side, they are still running, but rail tailwinds masked how little has actually changed. And the ones that actually are looking healthier right now are the ones that got lucky with the rates, but nothing. I don't feel so much has been changing from their end. And when it comes to the challengers, it really feels like, to me, there are like three different layers. There is, of course, Revolut, new bank at the top. They are not challenger banks anymore. You would even probably argue whether they are tech companies before being banks, while at the beginning they probably wanted to become banks. So I think like there is like this narrative that has changed a little bit. They are global financial platforms. Below you have like this maturing UK cohort, the Monzos, the Starlings, that are now finding out what it really means to be a bank, and to the point of Richard, specifically on lending. We have seen like really recently Starling getting basically having the COVID loans coming back to them and impacting their profitability. And I think it's just like part of like the experience of actually becoming a full blown bank. And then you have like the last cohort, to the point we have made earlier on like the focus on the acquisition of customers, but no profitability, and in an era where capital become expensive and is actually not only important to have like number of customers, but actually a sustainable business model. Those ones have disappeared. And on the last parts, like the big techs, I think a few years ago we were making the assumptions that yes, they wanted to become the bank. They actually could be very big threat to banks. And I think history has now shown the reality is a little bit different in the sense that we see Apple Card with like their 12 million customers. Apple seem to be very happy with this product, getting the data, increasing customer stickiness, but down the line, still having banks, even if it's not Goldman Sachs anymore, now JP Morgan, but running it for them. It doesn't seem like they actually really want to go on the regulatory side, taking the credit risk, but what they want seems to be the data. So I would say overall, the battlefield's more fragmented, and a lot of things is moving down the surface, and I believe is what we'll talk a bit later about.
It's been fascinating sort of talking through this diagram with banks and, fintechs over the years, because essentially the threat has been, like you say, Richard, you're very right. It's like, they'll never get a license, they'll never scale customers. They'll never get to profitability. And then actually all of these things have almost sort of changed that dialogue as it's gone on. And quite honestly, often they've been used as excuses to not really change the things that really need to change within those organizations. So the sort of the barometer of all of the things you're referring to there, Sophie, of the customer levels or, hitting, that's almost changed the excuses. It's kind of removed we can wait to do the thing, or we can wait to get the understanding. And that's, been really amazing to see. And I think the technology one, Apple, back when we were starting the transformation program at Lloyds Banking Group, when I was there, I couldn't get anybody to care about being scared about Barclays, or I couldn't get anybody to be scared about, what NatWest were doing. But everybody was terrified of Apple. And actually, the interesting thing is, even now, I completely agree with you, it's not core, it's nowhere near core of what they do, but actually, Apple makes, somebody estimated it's about 2% of overall annual revenue of Apple is through what they're doing with financial services. And you think, 2%, it's not a big deal then. That's $8 billion. That's still so it's like, it's non-core to them, but actually they've created the operating system that can determine, $8 billion to be created globally. That's amazing, isn't it? I know it pales still in significance to some of the banks around the world in terms of what that is, but as far as an offshoot of what your core core systems are, that's an amazing thing to do. I still think it kind of comes back to that impetus for change. Actually, you are all right. Then fintechs have really only been disruptive in very simple slices still across all of these things, and nobody, the argument is almost like nobody's done what JP Morgan or Goldman Sachs or big bank X or Y or whatever. But really, that's the point we're in. If you kind of think we're 15 years into a cycle and those banks have been around for 350 years, then sure, we haven't got around to all of the stuff that they're doing, but actually the things that they're doing really well, almost a layer below the battlefield. They are actually, going back to, Richard, not to put words in your mouth there, but it's like the things you do at Allica, you're successful because of the way in which you approach doing them. A big part of that is people, a big part of that is technology, right? And actually the coupling of those two things together means you can do things that other people will take so much longer to do, meaning every time you take advantage of a opportunity in the market, it's because you can put things in the hands of customers really quickly. And that, it almost, I know it sounds so simple, but it's that's the key to success in this whole market, isn't it?
Yeah, listen, I agree with that. For quite a while, I've talked about sort of the kind of three legacy factors in incumbents. Typically, there's legacy tech, right, that often gets talked about, which definitely can really hamper, right? But I think probably at least as important, actually, which is not talked about enough, right? But why challengers, including Allica, have succeeded, is legacy P&L and legacy kind of culture. And so legacy P&L, right, is the fact that, and they'll deny this, right, because of consumer duty and whatever, right, but they have bad income streams. The most obvious one would be a foreign exchange, which clearly Revolut attacked very aggressively, where people were making 3% kind of hidden fee, basically, on each international payment. that was being made. The Revolut attacked very aggressively, and that gave them a very good wedge in. And like, it wasn't that banks weren't aware of this, but just defending that was like the short-term P&L hit to defend that. No one ever took, right? You'd rather just bleed every year, like for a decade, than take that P&L hit, right? So I think legacy P&L is impossible to defend against, right? And at Allica, we very aggressively attack those legacy P&L points in our segment. Then legacy culture, which you probably bring into kind of org decision making in particular, I think is again at least as important as tech, right? How do you actually have people thinking about long term, executing short term, and with decision making rights to execute? I think typically people move jobs pretty frequently at a sort of mid-senior level in major banks. So yes, you might have a long-term slide deck, but no one ever executes that because they've moved job after 2 years, right? And something's been restructured. So it's mainly a political game. And then decision-making rights are not at all concentrated. They're spread into like 5 different committees. And so, yeah, your ability to execute in the short term is very low, and therefore very little gets done between those two factors. So, yeah, I think kind of people talk about legacy tech, but I think legacy culture and legacy P&L are at least as important as to why challengers can make significant headway.
Yeah, the P&L one particularly, I think, is always such a, like you say, people can kind of fantasize about a technology infrastructure because those bloody IT people don't let me do the things or whatever. But the way you make money, it's very difficult to get people to kind of move away from those things. And actually, that, to your point, that isn't just your revenue model. That's the P&L across the entirety of the organization, isn't it? And that's really difficult. But I think I think the challenge in all of this is it was seen as a disruption to customers rather than that disruption, but almost the disruption of the things that the customers, touch or talk to or whatever, actually is sort of 1% of the challenge, isn't it? It's just the manifestation of all of the things that your organization can do. And so, we did get into a cycle of people just, trying to copy features and functionality rather than fundamentally understanding it was what took to create those things. And that's I think has changed over the time. I think often, Richard, Sophie, you guys have worked in various different organizations. The ones where you can unlock things and, unleash talent and make things happen are the ones that, you retain employees for longer and they're more productive and all these things. And you often, I definitely have moved from the ones that inhibit people as well. So, it's a positive and a negative cycle for those organizations who, fundamentally just can't get shit done, right?
Yeah. Well, I mean, for years we've said that no one had truly combined scale, digital capability, structural leverage. I guess the question is, looking at the landscape in 2026, has that changed? And that's what we'll be exploring in the second half of the show, whether one player among others is navigating this new battlefield differently.
Hey folks, David Brear here, CEO of 11FS. Here's something you might not know about me. I get a lot of people trying to impersonate me online, fake profiles, scam emails, the lot. And a big part of that comes from data brokers, hundreds of them, quietly collecting and selling your personal information, your phone number, email, home address, job title, all out there and all fueling identity theft, scam calls, and spam. If you've ever searched your own name online, hands up, who hasn't? You'll know how exposed you really are. That's why we've partnered with Incogni. They contact 230 plus data brokers and tell them to delete your information properly and legally under GDPR and CCPA. Doing it yourself would take hundreds of hours. Incogni automates the whole thing and keeps working with repeat removal requests if your data reappears. I tried it, and within days, saw brokers deleting my data. You can even protect your family members too. Fintech Insider listeners get 60% off an annual plan. Just head to incogni.com/fintechinsider and use code FintechInsider. And yes, it's risk-free with a 30-day money-back guarantee. You'll find the link in the description.
This episode is brought to you by Indeed. Stop waiting around for the perfect candidate. Instead, use Indeed sponsored jobs to find the right people with the right skills fast. It's a simple way to make sure your listing is the first candidates see. According to Indeed data, sponsored jobs have 4 times more applicants than non-sponsored jobs. So go build your dream team today with Indeed. Get a $75 sponsored job credit at Indeed.com/podcast. Terms and conditions apply.
All right, welcome back. In this half of the show, we're asking whether the banking battlefield has evolved and whether it's effectively gone 3D. That sounds exciting. David, you've talked recently about the battlefield now being almost 3D, with an infrastructure layer playing a significant role beneath the front-facing brands and institutions. Worth, I think, probably maybe double-clicking on that and sort of what it means.
Yeah, I think it sort of talks to what we were saying in the first part, really, which is often, what is the saying, sort of beauty is only skin deep. I think actually beauty in the sense of what you can achieve from a financial services perspective goes like all the way down to your bones, you know what I mean? And the bones are sort of like the underlying rails and capability that you've got to build software, to build technology, to kind of make these things happen. And there's been different and interesting challenges underneath that with, the advancements in tech and, the newfound core banking systems and the rise of BaaS and all these different type of things that are going on there. But fundamentally, I think it's like, how do you ship code underneath this? Because, what you can do with digital or, how many customers you can acquire and the revenue model and the structuring, all of those things are, hugely important to determine who you are. But almost the speed in which your organization oscillates, your approach to talking to customers and doing stuff for them, like these things seem so fundamental when you're, 5 or 6 people building a startup, but actually often the sort of purpose of the organization wanes, and don't get me wrong, look, 300-year-old organizations are, well and truly entitled to sort of stumble a little bit on their successes, but sort of igniting some of those things in those organizations is, I really think, fundamental to them sort of remembering who they are and then giving people purpose in those organizations to get out of bed every day and work hard to do these things. So yeah, it is an interesting dynamic that actually we sit at, but actually with all of the pressures of the successes that organizations are having, damn sure they feel the people breathing down their neck now.
It's interesting, isn't it? Because all of the stuff that you mentioned is so obviously the right thing, but it is hard. And so I suppose there's always the choice of, do we do the hard thing or do we go out to the market and acquire and effectively cheat, right? And I suppose we've seen quite a bit of that as well.
Yeah, I think the sort of strategic being thrown away for the sort of tactical, is a age old as time, isn't it? Because of chasing, this year's targets versus dealing with yesterday's problems, and it is an interesting balancing act to get those things right. But that's the job, isn't it? That's the task of making these shareholder pressure for, performance and today's numbers versus, building the foundations for sustainable success. It's, I think chief executives of big organizations have got to be held accountable to both of these by their board, because actually they're the things that, jam today and jam tomorrow. I want jam forever, don't give me a scenario where I never get jam would be the ask from my perspective. But I think getting that balance is hugely important.
Yeah, I would like actually to jump in and double click on a couple stuff you have been mentioning, David. On the board side, I think there has been basically a lack of fast evolution of the boards to actually reflect the need of commercial focused people at the top that would actually enable to for the culture to evolve like all the product culture. So I think that's something that's happening. That's what I'm personally doing with as a board member, being the commercial person. But I also see that there is lots of legacy boards that are really very much focused on risk and compliance, and that's just not the right fit to compete in the today's world.
Just on that one, Sophie, I think that's such a great point. Such a great point, because actually the people that are put on boards to basically center check whether the organizations are moving them forwards, if they don't have the experiences or the right skill sets in order to go, hey guys, that sucks. I know you're thinking about this. And those experiences that they have, often what you're finding is it's OBE somebody or MBE, whatever. And actually their experience is 10 years ago, 20 years ago, 30 years ago in terms of when they were doing the thing. And that that changes the dynamic of the challenges that you're going to get from those board members, doesn't it? So, yeah, do you have the right people marking your homework is a really good, really good sort of question in the first place. Because if not, all you're going to get is, yes, or when I was doing it, that type of narrative. So I completely agree.
Even step further, giving you the homework, right?
Yeah.
It's like, I think, particularly challenging, right, in banking, because generally there is, certainly in the UK, right, but I think most regulators expect a independent board, right, where you have got people that are not management, not shareholders, that their job really for the regulator is to ensure safety and soundness of the bank. And they have no motivation really for anything beyond that, unless, and this is something we try very hard at Allica, people have a sense of purpose, right? I mean, because if you're doing the board role just to get a nice ned fee and whatever, and maybe it looks good on the CV, but you don't really have a sense of purpose about what the organization is doing, you're just really there to ensure safety and soundness. And that is going to maybe be tricky around some of the transformations that are trying to be done. Because you want safety and soundness, but you want to grow, right? And you want to do great things for customers. And so I personally think that sort of point about purpose and having like the entire company, including and particularly the board, really aligned around the mission of the company is super important.
100%. Yeah, I completely agree.
It's so much of sort of what we talk about, David, and we've got what we describe at 11FS as the culture pyramid, and I think everybody gets sort of wrapped up in technology, but as we sort of touched on a couple of times, it's not always necessarily technology. Actually, it starts from the purpose and the mission, and everything sort of washes down from there.
Yeah, I think the bad thing about pyramids is everybody thought loads of people died to make them, but that wasn't necessarily the truth. But Sophie, I interrupted you. You got a second point.
Yeah. My second point was that I'm very curious, and I'm sure you are too, about what it's going to look like in a world when Revolut and new bank are IPO'd. Because as much as they have this culture of going fast, building things, doing all those experiments, post-IPO, you just have different goals for your shareholders, like giving your dividends, your bold place cannot be maybe the same bold place that used to be. So I think there will be, it's going to be interesting to track. Like we have seen that Revolut has plans to IPO. I don't have the timeline, but soon. And I feel it could actually be an opportunity for other players to jump in.
Yeah, I think it's going to be an interesting one, isn't it? And particularly given the recent IPOs, something like Klarna, might put people off for a little while, but the pressure that when you get to a scale of somebody like Revolut and the amount of investors that they've had and the pressure that they get for, continuing the scaling from a valuation perspective, I think just because you move to a public shareholding it shouldn't, if that's done correctly. But I think it depends on how well that goes. I think Klarna is an example. I can see them, chasing valuations for a little while to kind of stabilize, which actually, there's nothing quite like prioritizing your product roadmap when you're chasing, public valuation versus, things that fundamentally affect your customers. And, in a perfect world, those things are one and the same, aren't they? But in reality, they can often be different. I think it goes a little bit back to that point of like IPOs should be at a point where you've got great product market maturity. Because, if you are monoline, the pressure will be to do more things. If you're balanced as a business, then actually profitability's an eventuality, isn't it? But yeah, it's interesting growing pains.
I get more than that, right? Because Nubank actually has been listed now for quite a few years, and generally the share price has gone up pretty well over that period. Klarna has not. What's the difference? Well, Nubank's very consistently grown its profitability at a very rapid pace over that period. Klarna is still heavily loss-making. Hence, the valuations look very different. I mean, it's simple as that, right? Public markets have a very clear lens on not just current profitability, but future expected profitability, right? And I think people extrapolate Nubank's profitability now quite a way into the future because they've kept delivering, whereas Klarna's, it's negative surprises like big credit losses, which you can argue is attached to a loan product, whatever. Sure, great, but I guess that's you create very different valuation outcomes in the public markets through that.
Richard, what are your sort of reflections or perspectives on Revolut. I know you touched on this briefly in the previous half, but I think it's worth probably double clicking. I mean, specifically within the context of what we've described as the banking battlefield, it feels like maybe their approach is slightly different.
Yeah, I mean, so I actually worked there quite a while ago now, so I have no insight particularly of where they are today, but it was always, and I'm pretty sure still is, right, the most impressive sort of product engineering machine I've seen in any financial services company anywhere in the world. And I'm pretty sure that still holds true today, right? The ability to execute a very wide range of geos, products, and customer segments is like unparalleled. And people think Monzo is good, right? But it's essentially doing kind of one geo and a much narrower range of segments and products than Revolut is. So it is like unbelievably world class, I'd say, at that, and that's powered it, right, to be able to have just so many different bets. And yeah, sure, a bunch don't work out, but a bunch do work out. And yeah, I think you've then seen that because it's very much about Eng, the kind of marginal cost of the growth is then very low. So lots of bets into lots of different kind of that 3D of like geos, product segments, and then low marginal cost you've built with tech. Like it is now driving very, very serious like revenue growth and profit growth. And I guess that's why it's being valued very highly, right? And back to the IPO conversation, I think they're doing the right thing because they do seem to be kind of like diversifying the investor base a lot. So they're kind of getting secondary for like early investors and whatever. Because last thing you want an IPO, right, is a bunch of people that immediately want to sell all their stakes and just push the price down. So they seem to be doing all the right moves from what I can see.
I mean, when you just look at the valuations, when you look at the customer numbers, the global reach. I mean, David, I suppose reflecting back on when you and Jason were sort of sitting down and coming up with the axes and designing out the banking battlefield, sort of how does Revolut's success and Revolut's approach, I suppose, what are your reflections on that?
Yeah, I mean, the bubble was a lot smaller and it was a lot closer to the zero line when we drew the diagram the first time, for sure. But I think that, speaks to like do really good things and enable them to be done and have like I feel like they announce another CEO of another country every 3 weeks at this stage in terms of, but that speaks to, again, look, if you set out an agenda and you pursue it in that way and you build on the momentum of the things that you're doing in other ways, like is there going to be a point where there's a problem here or there and something comes unstuck in one country or another, and like, yeah, sure, but I don't see them slowing down is the bit that sort of excites me about it. I think they're probably weirdly, we used to talk about Google being the best sort of example of shipping software globally with a unified technology capability, and I think Revolut are up there now. And to be doing that as a financial services organization, that's just that I think it basically takes away all of the reasons why a big global bank will be like, oh yeah, but we're doing it in like 80 countries and it's hard. And it's like, sure, but it's not impossible, and actually if your core capabilities are about, shipping things and making things happen, then there's pretty much, nothing you can't overcome at that stage. So, but Nubank and Monzo but all of these other, the Varos of the world, all of these people around the world who are acquiring customers really effectively. I think the core capabilities is, building software on top of great technology. And, the rest is, again, it's the Stripe thing. It's, listen to customers and do that thing, And maybe even somebody like Stripe's a great example. Like actually IPO is not really, that's not the end of the story for them ever. Like seemingly they can just keep, solving problems and getting the opportunity to solve more problems because they do it really well. And, it is Revolut destiny, an IPO. I don't know. I'm not sure. I think there's maybe more effective ways for secondary market stuff to happen to allow people to, cash out some of the things while maintaining their foot on the accelerator at the same time. But yeah, we do get very fixated, I think, in the US and the UK on, an IPO being the exit or the end. But in reality, I think, it's often quite an interesting test of the fundamentals of the businesses when they do it, which is kind of the point you were making, Richard, as well, right?
And I would add just that I don't think, and we I believe we all know it's not the end, right? Like I wouldn't think like Nick thinks IBO is the end for him. But what I would like to also add is that is just talking a little bit about Revolut journey from a macro perspective. So started like as a startup, was using modular back then for the payments, then starting building. And what I find very interesting now is that it took them some time to get the UK banking license. They've got a few compliance issues, but now they are actually going to the infrastructure layer, and they just joined the stablecoin sandbox that shows that now that it's not about fighting with regulators, it's actually really shaping the future of our payments. So this move has been quite interesting, and this is the way to actually control the future.
This is going to sound like a weird question. I'm not going to direct it to anyone in particular, so whoever wants to answer it can just jump in. But do you think we're still talking about banking? Or have we sort of gone broader? Like an example that stands out to my mind is if you look at what Klarna have done recently by introducing into their own app, their own environment, a sort of natural language AI model that you can just say, hey, look, I'm looking for this product. I want a green dress. And then it just goes out and it uses all of that language and it looks at all of the providers and it looks at local stock levels and all of that sort of stuff. And it comes back and goes, we think based on your previous purchasing history and all of that sort of stuff, it's one of these three options. And, when you think about, we so often think about embedded finance and maybe the financial services provider embedding their products into, say, the retail experience, it kind of flips that on its head. So is there a conversation here that we're moving beyond what we've traditionally considered as banking and sort of this becoming an awful lot broader?
I think it is, if I go first. I mean, but equally, we do need to separate kind of hype from reality as well. So I'll come on to I do think I agree point, but let me just kind of make that first. So Klarna, for example, right? Because one of the reasons they've taken valuation hit is they've actually moved right into consumer term lending, which is kind of a very classic banking product to try and drive revenue growth. So the promise of we're at the checkout button, we're the data, we can do retail sales essentially, which was where the valuation was very, very high, right, a few years ago. It hasn't clearly translated into revenue in some way, right? So I do wonder how much is real on that, right? Because they wouldn't be pushing hard into traditional banking products if that was like really motoring, I'd assume. But it is true, right, that clearly people are moving beyond banking. I mean, we've talked about Revolut, and clearly they've for a while now been going into the stays and the kind of Rev Points, Avios type thing and all that, which sort of is adjacent. I think people generally are doing adjacent things. Allica, we're building the same, right? The kind of spend management, cash flow insights type tooling. But I think it works best when it's adjacent rather than completely kind of different. But yeah, for sure, if you can solve adjacent problems, why wouldn't you? And I do think kind of like a payment account is a very good basis for that, because it's a high frequency engagement product, right, to then attach things to.
That adjacencies thing, I think it's interesting when you start talking about the difference between sort of the products and the services side of things there. So because actually, to your point, the spend cards and frequency flows of payments and things actually not really ever going to be lighting the world on fire when it comes to be adding profitability, major profitability to it. But actually, the opportunity it brings you to create services, and I go back to my sort of Apple pieces. Is like I'm so far down that ecosystem now. There's no help me. There's no way I'm getting out. It's not even about the products anymore. It's about all of the services that tie together to create the thing I use most every day, and it doesn't matter if it's my watch or my phone or my laptop or whatever, then actually, or how I manage access for my kids to screen time, like all of these things, it's a service layer that actually makes the products more effective. And, I think we're starting to see people think more like that now, which for me is the sort of the tipping point behind. I really, I big believer that actually people will be much happier with less price sensitive products if they've got a really good service that ties them together, and actually that relationship you have with customers at that level becomes a fundamentally different fundamentally different thing, and that won't be the same for every different type of customer. But on the whole, I really do believe that's the way forward. It's a services industry at the end of the day, isn't it? And those who do that most effectively will create the best level of trust from your consumers, and ultimately that'll lead to much better things for the businesses.
All right. Given that the banking battlefield was kind of a point in time, this is what we're seeing, this is what's going to happen. I'm going to ask each of you to close out with a prediction. Given what we're saying is that the banking battlefield has evolved, what each of you think is sort of the next structural shift that we should be sort of mindful of and watching out for? Sophie, maybe I'll start with you.
I would say under the hood, AI everywhere. And I think it has happened in the most technology advanced banks already, like specifically to decrease cost when it comes to customer service, credit decisioning, like fraud, compliance, pricing. So for me, like it is the one that really can help banks massively decrease their cost, and as a result, basically win versus their competitors, because they just can do more with less.
Awesome. Richard, what about you?
I certainly agree with what Sophie said about AI. It does feel like we've entered a sort of new game, right? With particularly the last 3 months, maybe 4.6 and 5.2 models, and very excited by like the potential for that to both. We talked a lot about execution, right? Like small teams win. Like you should be able to have very small teams with this technology, right? And therefore deliver massively more than you did in the past. And then, cost transformation, business process transformation via agentic AI. I mean, we're working very deeply on that, on sort of the complex SME loans we do, and see like large opportunity there. And it's cost, yes, but actually I think the biggest thing on what we do, for example, is immediacy. Like just make it super easy for a customer to immediately get to a loan application and a result from that. And I guess if we are then saying like AI is like dramatically going to sort of 10x some players, I do think the other massive ingredient there, right, is then customer trust. Because I can see kind of the future, right, that it's already happening. You have like AI slop content everywhere. You just get bombarded. And like, so people might get much less open to new things, right? Because they're like getting scammed and they don't trust it, and it's all way too like smart for them. So I suspect there might be something quite big, right, about actually having good customer trust and established relationships to build off.
Spot on. David, it feels only fitting to give the final word to you.
Yeah, I mean, I think it's, I think the thing that we'll see for me is like the market pressures right now are leading to really interesting opportunities for people to cheat. And I mean in a really nice way, which is like, if you look at Lloyd's acquiring somebody like Curve, they've acquired, a team and a capability that they, would have took forever to sort of build. So I think it's sort of a bit of a buyer's market. So while a lot of these fintechs have actually, done really amazing things to get tech into the market that customers are engaging with, then, they're not mature in the same way as a gigantic bank is, and that if you are the gigantic bank, the best thing you've got is just crazy amounts of money to buy your way out of this situation. So I think there will be more and more we see of fintechs being, bought up by organizations. I think the challenge to that is always back to what we were sort of saying earlier on is, do you really understand what it takes to make these things work? There's been plenty of organizations, buying fintechs, and, the first thing they do is, okay, you're gonna integrate with our HR systems and our finance systems and all, and now you're reporting to this thing, and it's like, well, that died really quickly, So I think it can be an amazing strategy to accelerate their learning and, understand how those things can evolve them from a cultural and a technological perspective. But I think you've got to be very eyes open to what it takes to integrate something without breaking the core thing that made it successful. So yeah, I think we'll see a lot more of that. But I think, truth be told, this is an amazingly changing landscape, whether it's the big banks or the fintechs or the big techs or whatever, then, I think the minute you think you can predict the future on it, then somebody does something amazing in that space, and, away we go again to how the market reacts. So it's been a fun journey talking about it. I can't imagine we'll be stopping anytime soon.
No, I think that's the beauty of it. That's why it's so exciting. All right. Well, look, that does wrap up today's discussion. Firstly, a huge thank you to our panelists for breaking this down with me, for all your amazing insights. And just thank you so much for joining me. Where can people connect and find out a little bit more about you? David, let's start with you.
Not really LinkedIn anymore. Those guys suck. If you want to email me on david@11fs.com.
Awesome. Thank you, David. How about you, Richard?
Yeah, I mean, listen, you can email me, but I mean, I am still doing some at LinkedIn, though, definitely a bit more slop going onto that platform recently. So do reach out.
Excellent. Thank you, Richard. Sophie, how about you?
LinkedIn.
Awesome. Yep. And likewise, you can find me still lingering about on the slop invested LinkedIn. All right. Well, look, thanks for listening. If you like what you've heard today, please follow our podcast on your favorite platform of choice. And if you really like what you've heard, why not share this episode with a colleague or friend? As always, if you want to join the conversation, find us on social media. Just search for 11FS or Fintech Insider, or email podcast@11fs.com. Thank you very much again, and goodbye.
Ryan Reynolds here from Mint Mobile with a message for everyone paying big wireless way too much. Please, for the love of everything good in this world, stop. With Mint, you can get premium wireless for just $15 a month. Of course, if you enjoy overpaying, no judgments, but that's weird. Okay, one judgment. Anyway, give it a try at mintmobile.com/switch.
Upfront payment of $45 for 3-month plan, equivalent to $15 per month required. Intro rate first 3 months only, then full price plan options available. Taxes and fees extra. See full terms at mintmobile.com.
Want to see your brand on TV? Roku Ads Manager makes it easy to launch targeted ad campaigns in minutes, track results in real time, and drive on-screen purchases with just a click of the Roku remote. Get a $500 match on your first $500 spent with code ROKU500 at ads.roku.com. That's code ROKU500 at ads.roku.com. Terms apply.
¿Hablas español?
Sprichst du Deutsch?
Kann du Norsk?
If you used Babbel, you would. Babbel's conversation-based techniques teaches you useful words and phrases to get you speaking quickly about the things you actually talk about in the real world, with lessons handcrafted by over 200 language experts and voiced by real native speakers. Babbel is like having a private tutor in your pocket. Start speaking with Babbel today. Get up to 55% off your Babbel subscription right now at babbel.com/Spotify. Spelled BABBEL.com/Spotify. Rules and restrictions may apply.